Britain's Finance Minister, George Osborne, will back a controversial plan for a major shake-up of the country's banks. The aim is to protect high street savers in the event of another financial meltdown. Beg your pardon. In a speech tonight, Mr. Osborne will endorse a proposal to split the bank's retail businesses from their investment units, even though they may be kept within the same bank. He'll also force them to keep much higher reserves of cash in their vaults to protect against future losses. Well, we're joined by our correspondent Emma Simpson, who's at Mansion House in the City of London, where the speech is being made. Emma, he's just about to start, or he has started already?
That's right. I mean, this event here at the Mansion House, Jamie, is always a big moment for the city calendar. The great and the good of the city are tucking into their dinners, and those big speeches are about to get underway. And as you say, the British Finance Minister, George Osborne, is effectively green-lighting a very big shake-up in British banking. And to talk a bit more about what this actually means, we've got Chris Roebuck here from Cass Business School. First of all, Chris, you get the sense that this is a fairly big moment for British banking tonight because it removes any doubt whatsoever that there is big change ahead.
Yes, certainly. For British banking, this is a very big night because what's happening is, to some degree, we're moving forward, but to another degree, we're moving back. Moving back in the sense that what George Osborne is saying is we have to go back to the days when banks held enough capital in their coffers for a rainy day, so if something happened, they wouldn't have to turn to the government to ask for help. And in this country, since 1966, there has been no requirement for banks to hold any capital like that at all, which is extremely dangerous. Back in the 1970s, they had to hold 28%. That was then reduced to 12%. And at the point of the financial crisis, most British banks were below 3%. So making them go back to the point where they have to hold something like 7 or 8 is really sensible.
And what about this idea of ring fencing?
Well, the ring fencing is an interesting concept. I think what most people don't realise outside UK is that 4 banks had problems in this country. Of those 4 banks, 2 were retail banks and 2 were investment banks. The ones that failed were actually the retail banks. So the assumption that retail banking is much safer than investment banking is false. The key thing is about the quality of risk management. But what that does mean by ring fencing is that if an investment bank fails, the government in Britain isn't going to have to pick up the bill. There is still an implicit suggestion, though, that if a retail bank fails, they may actually have to be bailed out. In terms of practicalities and how you make that happen, most of those banks that do have an investment banking component have it in a separate division already. So operationally, it's currently split. But the banks aren't keen to do that because actually they make quite a lot of money moving business between the two. But reality has come upon them and they're going to have to go with it.
Chris Roebuck will have to leave it there. And as always, Jamie, the devil is in the detail. And I suspect we won't get too much of that detail tonight. But it's a signal that there's a big change underway.
OK, Emma, thanks very much indeed.